thanks for joining in for this new edition of IEF Samvaad. I'm Shailja from Team Lease, handling enterprise sales and account management. Indian banking sector has seen a significant growth in the last 2 decades. Traditionally, they focus more on opening new branches, distribution reach, and hiring more frontline workers. Today, they're entering into a new era or a phase where digital adoption and automation is taking the center stage. And the focus is moving from distribution to workforce management effectiveness, where the productivity and capability is given more importance. Today, frontline workers are expected to balance a lot of things: the customer trust, the digital engagement, their sales performance, and also compliance, all at the same time. To see how they navigate this shift, we have Rajagopalan from Karur Vysya Bank, who has been a seasonal leader in retail banking and sales strategy. Thank you, Rajesh, for joining in IEF Samvaad today.
Yeah, thanks, Shailaja. I think it's a pleasure meeting to you. It's thanks for inviting me for this webinar. So let's start.
Yeah, let's dive into the new change that's happening in the banking sector. Well, traditionally, Rajesh, you will agree that organization or banking, particularly in banking sector, have more focused on opening new branches or having distribution reach or hiring more frontline workers. But now the shift is from the distribution to productivity. So how do you think it is shaping up? And also, what are the new performance expectation that is there from the banking professional today?
Yeah, here, yes, so Shailaja, actually the thing is moving from distribution to the, as you said, the productivity, because the distribution earlier, we used to consider a lot of branch expansion and, the BC channel expansions, and we used to have this EC, extension counters in a lot of, prominent colleges, schools, and all. So that is actually for getting into the mass acquisition. So now, as you said, things are moving towards we are going a distribution angle also. That means larger distribution and geographical presence also required. But same time, the focus moved towards the per resource productivity. So that is a key, because unless you get the cost of the resources from their performance, so the profitability won't meet. So that is actually a challenging now, because one side we are adding the cost, another side, as per the cost, we need to get the resource productivity. So that is a big challenge now in the industry, because one side the quality of the resources, another side we don't have the time to train up the resources and make them to productive. So the entire industry is looking for the ready-made resources from the day one to produce the result. So that is a challenge now because of these trend.
Right. So what I understand from you is that the distribution or the scale is still happening, but the cost management and the productivity is also taking the center stage.
Distribution. What we are doing now is distribution. We are not doing that expensive now. Earlier, if you see the branch expansion or BC expansion or extension counter expansion, I mean the distribution unit in one particular place. Earlier, used to spend a lot. The larger premises and lot of infrastructure inside. Now the distribution is there because we need to go for a geographical presence, but distribution center as a business unit, the infrastructure we reduced, and infrastructure reduced because we need to control the cost of the distribution point, and we need to put more manpower on it for getting the business outcome from the business, from the distribution point. So the cost of infrastructure is less, the cost of manpower is went up. That means we are putting more resources there, and obviously because of the resources intuition there, so we need to get the more result from there. So again, the cost of productivity is the major point there.
Got it. Fair enough. Traditionally, organizations have defined the metric of productivity of the banking professional in terms of opening new bank accounts, or for that matter, mobilizing the deposits or selling, cross selling the new products. But digital platforms have taken over these routine transactions already. So, how are the organization redefining the role for the banking professionals today?
There are okay, in banking normally there are two wings. One is the acquisition team. That means the person who's onboarding. So your question is relevant to the acquisition team. So acquisition team is a, earlier if you see less just 5 years before, not very long before, but just 5 years before, if you see the acquisition trend or the target or the expectation from the acquisition resource was just getting the customer onboarded. So once the customer onboarded, his job is done. So later, maybe if you take the 5 years as a a time frame, first year of that 5 year, the first year may be, that just taking the customer onboarded and just introduced to the bank, and the resource, the feet on street work is over there. And slowly that moved towards relationship building also. So later, the banks are started incentivize the resource, not only for the acquisition, later for the building the relationship. Then mid of the five, if you take the 5 year assessment, mid of the 5 year, maybe 2.5 years before, that moves towards the product per customer, building the products per customer also. That also target given to the customer. So then acquisition to relationship building, not only the relationship building, now the entire focus on the building the hooks and also the product per customer, improving the product per customer because of the stickiness. Because we are expecting the long term relationship with the customer, and also the customer should not immediately go out of the bank. So the stickiness, to build the stickiness, we need to sell more products. So that is a of the sales executive or the onboarding executive now. So that is a changes in industry now. And after that PPC, earlier we used to sell, we used to consider PPC for a loan product or housing loan and all. Now the PPC or keeping the customer with the bank is, you need to sell more digital products, and you need to give lot of lifestyle product or experience to the customer, like for example launches or digital payment solutions. So these are the changes in the banking system if you see last 1.5 years.
Right.
So yeah. So once the BDM or the executive sell the product, he need to ensure that customer is doing the transaction. The transaction was earlier just credit and debit. Now the transaction means whether he is using this credit debit card or our banking system for payments, like payments in the sense of digital payments, whether he is using the internet banking, whether he is using the mobile banking, whether he is using the UPI transaction through our banking system. So all these transactional targets or the digital, maybe you can call it as a digital migration of the account, that is also a target for the resources now. So that is one of the changing scenario if you see in sales side or maybe the acquisition side of banking.
So what you are saying is that the metric has been redefined to long-term customer relationship, and also ensuring that there is a value that is delivered to the customers.
Yes.
Fair enough. So, the digital banking or an automated onboarding or a customer-driven insight, all of this basically has changed how banks interact with customers. So today, how is this changing, basically impacting the performance of an salesperson? Because he is basically undergoing this particular change. He's moving from a mere transaction to, kind of a financial advisor. How do you redefine, how according to you feel that this change is happening?
So AI in this onboarding side, I don't think that is not actually is not impacted that much, because we need the human intervention for meeting the customer and onboarding the customer. So AI or the digital, whatever the so-called digital transformation, actually will have an effect only after the onboarding. Only after the onboarding, the customer expectation is more now because if you're not giving the proper digital solutions, or if you're not capable enough with other competitors, then the chances of moving this customer towards other banks are higher. So
Hmm.
so there the onboarding is easy. So onboarding is easy because of the sales targets. The executives go and get the customer. But as a bank, what is the challenge is to maintain the customer or retain the customer with a lot of solutions which are available in the market, or you should be better than other bank to give the digital solutions. So that is actually is a challenge. And there two aspects. One is those who onboarded should have the knowledge on this new trend in the market or new products in the market, or he should know, or he or she should know aware about the new banking digital products and what is the solution the customers require. Okay, rather than having the old set of products like basic current account, savings account. So that knowledge is not enough now. So the person should have the proper knowledge on the digital payments and UPI payments and all the new era of digital banking. Otherwise you will be out of the system. Or if you are not able to custom convince the customer in this angle, then you may lose the customer also. So that is a big challenge in the banking now. So how this AI is affecting the bank or the affecting the human resource is the resource is not enough, not having enough knowledge on this side of transformation, then he will lose the customer, or he may lose, or he may out of the trend, or he may out of the system actually.
So, what is more important is after onboarding the customer, the maintenance of the relationship becomes the key, and for which the banking professionals or the frontline workers have to be trained very well, and otherwise they will not be able to maintain or retain the customers.
Yeah. So that is a big challenge in the system. So if you think, or if you work keeping the same old traditional banking in mind, and if you approach the customer now, especially the new gen bank, customers, maybe below 20 or 25 years kids. So they are not interested in your, the basic debit card features. They are not interested in your current account interest, nothing, or savings account interest. They are more interested in, what is the digital features you are giving, and what is the offers which you are giving for the other digital platforms, like maybe the Swiggy or Zomato type of or the movie, or because if you see the new gen transaction, so their cash withdrawal or the transaction to the the basic transactions, what how we used to do, so that is not there in their accounts. Their payments is totally different. So they
Yeah.
are spending more towards this food, entertainments, and
Traveling.
maybe, yeah, yes. So those areas we need to actually make those areas we need to seriously think, and we need to create a new trendy products to survive in the market. Otherwise we'll be out of the field. Yeah. So they are least bothered about your old traditional concept, like interest rate. They are least bothered about the fixed deposit. So they are more fancy towards if you see the recent data, in the share trading, the highest number of retail share trading is coming from the Gen Z, because they
Yeah.
are more, so they are most towards easy money. They just invest and taking back immediately. So that is, the trend is going totally different way.
Right. So digital ease is what Gen Zs look for at this point in time.
Yeah, 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 yeah.
So moving on to the next question, Rajesh. Large organizations have always focused, or rather believed, in their regional managers or the branch managers to implement their sales strategy. So, in your experience, how much is the managerial capability more important in driving the frontline workforce?
So manage in this front. executive, like for basic, if you see the sales in the feet on street side, the middle level managers are actually having a have actually they are having a more responsibility, because so these employees are the basic employees where the knowledge level is very less, and also the you need to engage with them, every intervals, and you need to keep on motivate them in in every maybe every day or every hour you need to motivate them. So the skill set of the supervisors should be in that manner actually. Because if you see the average age of the feet of street or the frontline officers in any bank, it will be somewhere around 22 to 25 maximum. That is a so that age, that category of youngsters are, because you are from recruitment side, so you know that the churning and how serious they are towards the work. So managing them is actually a different art. So coaching is the major key there, and motivation and engagement of supervisors, that is more crucial there, and performance monitoring, and the supervisor should be in the position to monitor performance ever, because it's a dynamic, because the sales numbers and performance every 1 hour we need to keep monitor these performance. So as per my view, the middle level supervisors are the key, where the person should be a very highly he should be a moderator, and he should be a motivator, and he should be a coach. He should be a good coach, and he should be very patient enough to handle this team, because the youngsters are very highly dynamics, and the engagement with these resources, especially the young guys, you need to engage with them very. Hello, I'm getting another call. 1 minute, I think it's good. Yeah. So you need to engage with them in every interval. So the middle level management are key actually in this, because they are having a more responsibility towards this.
So they have to wear multiple hats to make the resources
So there should be a teacher. There should be a teacher, and they should be act as a very good teacher, and they should act as a good boss, and they should be a mentor, and they should motivate, and there to monitor the performance. So and they should go micro. So the middle level manager is a key part of it actually.
Understand. So moving ahead, Rajesh, as technologies like AI or automation and advanced analytics is taking over banking sector, how basically or what kind of skill sets do you feel that a banking professional should have for the next decade, to be very successful in his job career?
In banking, the next 5 to 10 years will be really challenging. So those who are having good data literacy, that is one of the main, I think, knowledge you should have for growing in the and analytics thinking, and also the risk and the cyber security knowledge. So all this, I think, and risk management and communication, business acumen, of course, so that is, and emotional intelligence and empathy. So because since now this AI is taking over, so these two things will be missing in the system. So I think,
Right.
yeah, so all this is a crucial knowledge you should carry for next maybe if you want to survive in the banking next to 10 to 15 years. Banking totally moving from tradition to totally into technologically driven. It will be something like traditional to technologically driven organization, where the branches will become more solution provider than the service provider. So I think so that will be the challenge. So there, if you have a proper knowledge on these areas, I think an AI automation literacy, analytical thinking is required, because unless you have the analytical thinking, you can't give the data to the AI, because you should know basic things. So all this will have a big impact in the maybe the human side, maybe next 5 to 10 years.
So, do you think the organizations are gearing up to this kind of a change, and how are they training their resources to achieve or preparing them for the future?
Organizations are actually, if you ask me from the HR point of side, they are doing a lot of initiatives towards this. I don't know whether it's for the namesake or whether they are seriously doing it, or I don't know whether the people in the organization or the employee of the organization, whether they are taking it very seriously. Because I'm not sure about, still they are serious about the impact of this, or I don't know whether they are foreseeing any impact in this maybe after 5 or 10 years. And if employees are serious, means few employees, if they are serious, a few employees, they are taking it very seriously. Some
Yeah.
employees, they are not believing that, this will have an impact in the future. So those employees are still, not taking it very seriously. They are just keep on moving as usual. So those who are taking it seriously, I think they will have the space to continue in this part of world, maybe another
Yeah.
5 to 10 years. Those who can't, they'll be out of this system, maybe after 5 or 6 years, or they'll be outdated.
Completely true.
Yeah, but HR is doing a lot of initiatives from the management side, and but whether they are able to communicate it in a such a way that this is important and you need to take it very seriously. I don't know whether they are able to do that. I'm not sure about it. Or I
Do you think it is lack of awareness? Because every day we read so many articles about AI, but everybody believes that, okay, my job may not get affected, but they are not realizing that it may hit them very hard very soon. So maybe it's
Yes.
lack of awareness.
Yes, it's a lack of awareness only. So that lack of awareness, unless you get hit of it, then otherwise, then unless you get hit of it, you won't understood that. So till you get a hit of it, you know, you will keep on say, nothing will happen to me. So I think that is because if you see the trend in banking now itself, you can see a lot of differences. Like now we are not talking about anything. If you, said earlier, now we are not talking anything about getting one current account or getting one savings account. We are talking about after you got an account. So what are the things which you are supposed to do in that with the customer? So as you said, the relationship building, and after relationship building, what are the products you can you can sell to the customer? For selling those products, whether we are having the capability, so or are we having those products with the bank or customer? What are the digital digital migration which you did, like whether the customer is doing with the, mobile banking. And if you see just 5 years before, so we used to talk about internet banking. Now we are not talking about internet banking at all, because internet banking is become out of fashion now. Now in mobile banking, because and from mobile banking now, if you see the mobile banking transaction uh, have overtaken by the UPI now. So if you take the GPay, or of course GPay is a UPI, but if you take the transaction through the GPA what you're doing, and the transaction from the mobile banking you're doing, so the GPA will be more, where you don't have banking at all. GPay doesn't have any banking, so it's only is an intermediator. So GPay is doing number of transactions than the banking system in India now.
True.
So that is a transformation. I think another 5 years, if you see 5 or 10 years later, if you see the branch banking, the branches of the banks will give you a solution than the service. They will tell you how to do the mobile banking transaction, or you may go to the bank for getting your mobile banking service done, or maybe digital payment solutions, or maybe GPay or UPI transaction services. You won't go for check deposit or cash deposit. That era is gone.
Completely.
Yeah.
Great. Thanks, Rajesh, for sharing such practical insights. I think one thing was very clear in today's conversation is that banking sectors are not just focusing on the digital infrastructure, but also equally focusing on the workforce productivity and capability. So let me conclude today's session with a quote from Peter Drucker, who said that productivity is not everything, but in the long run, it is everything. So thank you so much for joining in today's session. Thank you.